Yep. Everyone wants to know if the bottom's in, could go further, what's causing it. So yeah, happy to chat about all that. The thing about the gold rally is I actually don't think it was a debasement rally.
Where do you see the next big buyer coming in for Bitcoin? And what do you think that next cohort of the market is?
Yeah, it's a great question, but this is going to create a rolling wave of inflows. I think it's a little bit of an issue. So it does get raised in my meetings, particularly with larger institutions. It is a reason for them to say no, have an opportunity to scale like 100x as tokenization becomes a thing. They're the real 100x beneficiaries.
Well, let me give you an introduction as people start to come in. So I'm here with Matt Hougan. He's the CIO of Bitwise, one of the biggest asset managers in the crypto space. What's your AUM at the moment?
It's around 15 billion across all our US and European ETPs and our staking business and our alpha business.
So one of the biggest players.
Yeah.
One of the biggest players in the space.
Yeah, I think we're one of the top one or two crypto specific asset managers, and certainly one of the only full stack that goes across sort of TradFi ETFs all the way up to vaults and staking. So we try to do the full spectrum. I think we may be the only one that's doing that.
And how involved are you guys with like the altcoin market beyond Bitcoin?
Pretty significantly. So actually our very first product way back in 2017 was the first crypto index fund, which holds the 10 largest assets. And we still run that fund today. It's the largest index fund in the world. We also have DeFi index funds. We have an NFT index fund. And in our active business, we can, of course, go into the small cap spectrum. So look, our largest products are Bitcoin and ETH, which won't surprise you. But we have a lot of familiarity, at least through the top, let's say 50 assets. And then in the personal account, of course, some of us go much further than that.
Which I think makes you quite a good guest because, I think you've got like a broad spectrum of understanding across what's happening from Bitcoin to stablecoins to RWA. So yeah, I reckon let's just get stuck in. Like I've got to ask you firstly, like what do you make of this Bitcoin move? Like how have you digested this? Because I said on my X this morning, like I think this is probably the most aggressive selling I think I've ever seen. If you actually go down to the order books and look at Binance and Coinbase order flow, like it's pretty much been relentless for the last 2 weeks or week without pretty much a single bounce. So what do you make of everything now that the dust is settling a little bit?
Yeah, I was going to say, Miles, hopefully settled. Never say never. I do think this is an interesting opportunity if you have a long-term time horizon, and I think we'll probably round to a bottom. But could it go further? Of course, I think the thing about when I watch the media talk about these big market moves is they try to pin it on one specific thing. My take is this is not a one specific thing move. I think there are 6 or 7 factors that are contributing to this all at once. And that's how you get these big sustained selling. So just to itemize then, some of it is OG crypto investors selling out of fear of a 4-year cycle. They sold maybe $150 billion in 2025. I think that started to taper off, but they have been right that the 4-year cycle would repeat, and some of them stepped out of the way. Some of it has been still the effects of the October 10th liquidation event. I think there's still rumors, I'm sure you were hearing them yesterday, of forced selling by one or more hedge funds or broker dealers that were impaired in that event. I think that is in the mix. I think some of it is concerns that Kevin Warsh, the new Fed chair, is more hawkish than some of the other people that were being considered for the Fed chair. I think some of it is the broader macro picture. People were selling Palantir and Amazon yesterday. They were selling silver and gold. They were also selling Bitcoin. I think it's when you put all those things together, you get this kind of sharp move downwards, particularly when those of us who are bullish long-term. But we don't have a specific thing that we're pointing to, a Schelling point that we say, it's going to be this. Right? It's going to be the approval of the Bitcoin ETF, or it's going to be the emergence of DeFi. We're sort of reaching for that narrative. And so I think it's all of those factors at once. But it was a big shocking move yesterday. Fear and greed went to the lowest level, I think, in history. So maybe that starts to form a bottom. I guess we'll see.
Yeah, it was an absolutely insane move. I mean, yeah, it was literally the lowest level on the index since the index was created, which is a pretty insane statistic because like absolutely insane.
I would just throw it one, I look at that amongst all the things, actually, that 5 reading made me the most optimistic. I look for asymmetric trades in my life, and that is just an asymmetric chart, right? Yeah, could it go from 5 to 4? I guess, but 5 can also go to 100. And so I think when you think about where we are in the market, that fear and greed index is actually a good place to start. It is really all the way floored on the fear side, and that does create some asymmetry if we start to get more positive or more balanced news. So that reading made me pretty happy yesterday.
So you mentioned before that you're a big believer in Bitcoin and crypto more broadly longer term. I think now would be a great time to zoom out and understand that thesis, because obviously Bitcoin is extremely reflexive to price. So price often leads narrative, and with price coming down, I think a lot of people have been like questioning their Bitcoin thesis. I've seen it, interestingly, not only on a retail level, but I've also started to see more OGs and more, senior people in the space I'm speaking to starting to kind of doubt their own thesis. This is something that's very common in bear markets, but interested to know from your perspective, like what is your thesis? I think obviously starting with Bitcoin first.
Yeah.
Is it digital gold? Because it hasn't really been acting like digital gold. It's also been underperforming risk assets. Do you think that's a temporary blip? Do you see a different kind of correlation longer term? Very keen to hear where you think Bitcoin has its place in the macro economy.
Yeah, absolutely. So my core thesis on Bitcoin is digital gold. I think it's better than gold because it extends self-custody through settlement. I think gold is good as a store of wealth, but as we move into a multi-currency world, the ability to use it to settle transactions is really challenged by its physical girth. And Bitcoin solves that problem. When I look at it, I actually think it's been doing a good job as digital gold if you look at it over the right time horizon, right? Over the last 10 years, the dollar is down 26% and Bitcoin's up 20,000%. That's pretty good. If you look since the COVID low, even today, Bitcoin is up 20x from where we bottomed at the start of COVID when inflation really hit. It's on these shorter term periods. And we can talk about why it didn't follow gold up at the end of the year. I have a very strong view there. But gold itself, if you've been studying gold for 10 or 20 years, goes through long periods where it doesn't do a perfect job storing value. You have to look over long periods of time. So I think the Bitcoin thesis is still intact. The technology still works. It's still the only digital asset you can self-custody through settlement. And that is a very powerful thing in a world that's losing faith in institutions. I still think that's intact. But yeah, maybe I can talk about why gold rallied and Bitcoin didn't.
Yeah, for sure.
So the thing about the gold rally is I actually don't think it was a debasement rally. What I think happened was that in 2022, the US seized Russia's treasury assets and central bank purchases of gold went up 150%. So actually they had been buying about 400 tons of gold a year. And in 2022, they bought 1,000 tons. And then in 2023, they bought another 1,000 tons. In 2024, they bought another 1,000 tons. In 2025, they bought another 1,000 tons. So it did a one-time uptick because central banks learned that if you held US Treasury assets, they could seize it if they wanted to, and they didn't like that. That obviously doesn't apply to Bitcoin because central banks don't hold Bitcoin by and large. It's not yet big enough, but that's what drove gold. The interesting thing about that, Miles, is that the price of gold didn't go up in 2022. So central bank purchases went up, but the price of gold went up like a couple percent. And then the price of gold went up like 11%-ish in 2023. And it did a little bit better in 2024. But yeah, you're highlighting it. The central bank purchases increased, but it took 4 years for it to work through excess supply. So for those first 4 years, people were willing to sell into the market. And central banks kept buying. They were willing to sell into the market. What happened in 2025 is that people ran out of gold to sell. And so as central bank buying persisted and the available supply sort of exhausted itself, the price has nowhere to go but parabolic. I actually think long-term, the same thing is happening in Bitcoin. If you look at ETFs on a 1-year basis, I know there've been outflows over the last few months, but in 2024, ETFs bought something like 2x the supply of Bitcoin. In 2025, ETFs bought another $20 billion of Bitcoin. That was more than the available supply. That chart is going up quickly. And from my conversations with institutions, it's going to go up again. I was at meeting with financial advisors this week in South Florida. Yeah, exactly. They are still very interested in Bitcoin. Many of them see this as an entry point, a new time to get in. People who bought it previously are going to continue to hold. So ETFs are going to eventually exhaust the supply of Bitcoin the same way gold eventually exhausted the supply. It just takes a while. So look, when I look at the gold move, I say the store of value market is bigger than it's ever been, and Bitcoin is eventually going to win a huge share of that. I think that's still intact. I don't think people should give up the faith.
So this is a thing that I've heard referenced a lot over the past couple of weeks, and I know price is down, so these narratives come up, but I think that it's a good thing to discuss. In 2023 and 2024, price rallied because of the ETF hype. There was that anticipation that there was going to be the ETF. So price really started to climb. And I remember there was like the fake ETF, and then the prices started pumping, and then people realized, oh, if the real one comes, it will probably explode. It kind of gave us a sneak peek. So then it really rallied, consolidated for a bit, rallied again once people realized it was actually a record ETF launch. Then it cooled down for a bit. Then the next leg, I think you could put down to obviously Trump inauguration, and then the DAT trade towards August, September last year started to get crazy. But it feels like a lot of the catalysts for crypto, like the upcoming ETFs, the DATs, like a lot of the things that were pumping crypto have like those narratives have been exhausted, for lack of a better term. Yeah. So I guess what people are asking now is like, who's the next marginal buyer for Bitcoin? Like, you mentioned here, you're seeing a lot of institutional interest. Like, do you think there are still like many institutions yet to allocate? Is it family offices? Do you think eventually it's, sovereign nations? Like, where do you see the next big buyer coming in for Bitcoin? And who do you think that next cohort of the market is?
Yeah, it's a great question. The challenge for the market right now is that the positive stories are very slow. So the next cohort is still financial advisors. It's wirehouses like Morgan Stanley, it's family offices, it's insurance companies, and it's sovereign nations. I'll give you two facts that to explain why it's still that story, why we haven't even really seen the impact. This is the market that we serve at Bitwise. This is how we've gone from nothing to $15 billion of serving this market. Our average client allocates with us after 8 meetings. In other words, either me or one of our 25 salespeople or our research team has to go meet with these clients 8 times on average before they allocate. In general, we don't meet with people more than once a quarter. So 8 times is 2 years. That's how long it takes for these traditional financial executives to get their heads around Bitcoin. I raise that because we haven't even really seen the flows, right? We've seen the initial flows into Bitcoin ETFs from people who are already familiar with it. But the people who are starting at zero, 95% of those people are still just now getting involved. And the way this market works is that on the first day of Bitcoin ETF launch, only a small fraction of the institutional market can buy it, maybe 10, 15%. If you're a financial advisor on a big platform like Morgan Stanley, they just approved it in Q4 of 2025. So their 8-meeting clock just started a few months ago. They're going to be allocating in 2027. And this, it's obviously different people come at different times. This is an average, not individual, but this is going to create a rolling wave of inflows. The other stat to just support what I'm saying, so you don't think I'm just sort of giving you hopium, is, I come from an ETF background. So before I was CIO of Bitwise, where I've been for 8 years, I was the CEO of ETF.com. I actually created the first ETF data and analytics business, the largest ETF conference, and I was in that market for 15 or 20 years. The closest analogy to this was the gold ETFs, which launched in 2004. And when the gold ETFs launched, the first year inflows was something like $3 billion. And it was the second biggest ETF launch of all time. And everyone was excited. But the second year inflows was $5 billion, and the third year inflows was 8, and then it was 10, and then it was 12, and then it was 18. It actually took 8 years to reach the first peak of inflows, and then it fell a little bit. And actually, on the 18th year was the peak to date in terms of inflows. The TradFi market just moves extraordinarily strong. So I raised that by saying most of the world's capital is controlled by professional investors. Most of that money doesn't own Bitcoin yet. I think eventually it will, but that takes just an enormous amount of time, right? It takes an enormous number of meetings, an enormous amount of education. But make no mistake, from my channel checks, from our internal flows, it's still happening, and I think it'll happen for years to come.
I've got a question regarding these institutions. Recently, the quantum narrative has started to heat up, and there was that one big fund manager who sold some Bitcoin because of it, and that kind of caused a media stir. Is this something that is now, when you're speaking to these people, is that something that's now being brought up as a concern? And then more broadly, like what do you think of that concern? Obviously, Michael Saylor came out and I think on his meeting this week said that he's working to develop a task force or a group to help solve this issue. But yeah, is this becoming like a big issue, or do you think it's more of a media kind of beat up?
Yeah, I think it's a little bit of an issue. So it does get raised in my meetings, particularly with larger institutions. It is a reason for them to say no. Sometimes they're just looking for a reason not to do it because they don't feel comfortable with it. And if they can point to something like quantum, then that is a reason to delay making that decision. I think it's keeping them out of the market. For what it's worth, I also think usually in these market pullbacks, one of the sources of support in Bitcoin is sort of the OG Bitcoin community. And I think when you have Willy Woo worrying about this, and when you have Castle Island worrying about this and Nick Carter worrying about this, part of that OG community is uncomfortable coming in until Bitcoin core devs make this a thing. I think tangible progress on quantum resistance would actually be one of the signals that could help us bottom. Now, do I think it's a pressing problem? I don't think it's a pressing problem. I still think it's many years out. Do I think Bitcoin can solve it? I think Bitcoin can solve it. We know what the problem is. There's some uncomfortable decisions we have to make with things like Satoshi's wallets, but it is a problem that we can identify and solve. But absolutely, is it coming up at the institutional level? Yes is the answer. I met with a central bank earlier this year. They raised the question of quantum, and telling them that we know it's a problem and that there are solutions in the future. They can say, great, but you still have to implement those solutions, right? And there's always a risk in implementation. So I do think this is one of the things that could help us bottom and be a positive catalyst.
I guess the bigger issue with quantum in my mind is maybe not even what happens to the 25% that's, potentially up for grabs. It's more so the fact, as you were saying, if institutions are like factoring this into their risk equations, how does that impact the buy demand in the shorter term until it's fixed, like let's say over the next year, like it's a tail risk? And then given the fact there's been lots of like OG whale selling and, Bitcoin is still relatively concentrated compared to other asset classes, is that hesitancy potentially skewing the books a little bit? That maybe, if quantum wasn't an issue, there'd be more buying, which would offset some of the, the selling that we've seen. So, and then it causes this downstream effect of price does badly versus gold. People question the narrative, and it kind of snowballs a little bit. I
think that's precisely right. That's precisely right. I said this to someone the other day. It doesn't matter if I'm worried about quantum, right? It doesn't matter if I think the devs will solve it. It doesn't matter if like I'm feeling it matters what the community thinks, because as you said, it keeps some of those OGs on the sideline. It skews the book. It removes a source of support, and it can spiral. And, you can look at the relative returns of an asset we haven't talked about, and this is not the only reason it's been more resilient, but Bitcoin Cash versus Bitcoin, since they got on the quantum warpath, it's outperformed. I may not like that, but it's just objectively true. And I think the data in the market suggests what you're saying is true. This is keeping part of the OGs out of the market. It's probably encouraging them to sell. And it doesn't matter if that's a real concern or an immediate concern or not. It has to be solved to help with that relative narrative.
Honestly, I don't pay much attention to Bitcoin Cash. I'm surprised to see how decently it's holding up.
I don't pay much attention to it either, but I was looking at the other day at monetary crypto assets. And if you plot since, let's say, the start of 2025, if you compare Bitcoin, Bitcoin Cash, Zcash, and Monero, I think it tells a pretty interesting story, which is that there's part of the OG crypto community that I think is worried about Bitcoin and quantum, that is worried about sort of suit coins like me dragging Bitcoin into the regulated market, and privacy coins, and maybe with Bitcoin Cash's sort of tilt to quantum resistance in the middle or part of last year. There's been a little bit of rotation there, right? I think it's an interesting side note. Again, I think Bitcoin wins in the end. That's my core thesis, but the numbers suggest something interesting is going on.
Are you bullish on any of these? I mean, not just these specifically, but privacy in general?
Hugely bullish on privacy. I do think one sort of picture you can have in your head is that as Larry Fink and other traditional investors drag Bitcoin into the regulated sphere, it creates a much bigger space for actual privacy coins on the other end of the sphere, where they won't participate in the same way in the institutional market. Like, I would be very challenged to bring a Monero project to market. It just wouldn't sit well with regulators. But that is a significant community. And I think, again, as we move crypto more mainstream, the space for that widens out. And I think, when I talk to that part of the community, they are excited about those markets.
And what about institutions and RWA? Like, I think privacy makes a lot of sense for a lot of these players too.
Yeah, I think that's right. And there are a lot of various flavors of privacy that you see circulating in the market on RWA. If you look at the sort of mimetic success of Canton over the last year, that's mostly tied with institutional desire for privacy. It's partially tied by the extraordinarily effectiveness of Yuval as CEO there. But part of it is tied to privacy as well, and concerns about that. So look, my base case is that all of finance will move over blockchain-based rails, but we're so early in that process. What is RWA? It's like $25 billion. We're so early in that process that anyone who tells you, I know exactly how it's going to be, is lying, right? To put this chart in context, there's $110 trillion of stocks, right? There's $150 trillion of bonds, or maybe $200 trillion. So this is like 0.01% penetrated. And I do think there's a chance that this market wants more privacy associated with it. And I'm bullish on those projects because I think it'll be years before we know. And in the meantime, they have a legitimate shot on goal.
What do you think the biggest beneficiary is of RWA growth? Like, let's say RWA growth does go to 1 to 500, billion.
Yeah.
Who do you think benefits? I mean, not just the tokens, but the ecosystems. Like, is this bullish for Ethereum? Is it bullish for Solana, L1s in general? Are there going to be niche plays that win? Like, where are you looking at, not just allocating, but like areas of interest as well?
Yeah. I think it's bullish for the L1s, but I think that's pretty well understood. Like, I think it's bullish for Solana. I think it's bullish for Ethereum if they execute well. But I think the most interesting and overlooked side of it is, I think it's dramatically bullish for DeFi. Really, the killer app of tokenization is not faster settlement, right? It's actually not that my father is sitting with his Schwab account and frustrated that it's T+1 settlement. That's like a minor frustration. The first thing people do when you have tokenized assets is they borrow against them, lever themselves up, margin them, loop that leverage, etc. That may be good or bad, but that is what people do. They use tokenized assets in DeFi. And so if you think about a world where we have $200 trillion of tokenized assets, and everyone in the world is walking around with a wallet where their assets are tokenized, I think the volume of lending and borrowing is astronomically higher than it is today. I think the number of people providing liquidity or taking liquidity off markets is astronomically higher today than it is today. So I think well-organized DeFi projects, particularly that get their tokenomics right, have an opportunity to scale like 100x as tokenization becomes a thing. They're the real 100x beneficiaries. ETH and Solana may be 10x beneficiaries, but they are the like 100x opportunity if you can find the right ones.
Yeah, I even saw Maple as one example of this. They hit all-time high, or at least highs, I think, for the last 12 months in their revenue as well, in a very bad market. So it shows that the market's slightly detached price action across tokens as a whole, which has like other structural risks associated versus like the actual revenue and liquidity that's flowing in. And I think the same comment you can make about stablecoins, like they keep hitting new highs, despite prices being down.
Yep.
So I think it is important to separate. I said this in a voice message this morning, like price action and the actual adoption that's happening behind the scenes. Although, it can be difficult to do in the shorter term.
It can be difficult, although I'll tell you what you're doing there, in my experience, is like the best way to organize yourself in a deep bear market is if you find something that's treading water or gaining share in a deep bear market. When the bull market comes, it tends to do extraordinarily well. So I do think the signal that you're showing there on something like Maple, what you see in Morpho and Vaults and things like that, there are a number of protocols that have been doing really well. Again, I think they're just scratching the surface. I'll do big picture. If you fast forward 10 years from now and every asset is tokenized and the people who are DeFi native are not 29, but they're 39 years old, so much wealthier, the scale of it is just astronomical. This chart, you won't even see it. It'll be like that little tiny flat line. It'll be like Bitcoin at $1 or $10, right? We were excited when Bitcoin went from $1 to $10, but you can't even find that on a chart today. That's what that RWA is going to look like.
Were you around to see that? I wasn't in the space at $10 Bitcoin. I wish.
Yeah, I wish I had bought some, but yes, I did my my first meeting on Bitcoin when it crossed $1 at ETF.com. One of my analysts was big into it. Yeah, I often thought if I had left that meeting and bought $1,000 of Bitcoin, it'd be a very different world. But so I was at least monitoring it. I didn't get more seriously involved until it was unfortunately in the thousands.
Stepping back from Bitcoin and speaking more about the space broadly, obviously the last few days, there's been like a few pretty big names leaving, like Carl Samani stepping back. I mean, there's rumors as to why it might not just be related to crypto, but also some other OGs. Jason Choi just put out a post this morning about what happened to crypto. He's doing a full article. Like, obviously, there's been a lot that's happened in the altcoin space. We probably don't have enough time to cover it. Clearly, like a lot of extractionary launches, pretty broken, and this is partly to do with the regulatory framework, like launch mechanics around Binance, and clearly, like a lot of retail have been wrecked, and just overall, there's a lot that's happened in the altcoin market. But what do you think about what's happening at the moment? Like this perceived like exodus of VC investing, talent in general. Like you can see here, the developer count hasn't grown since 2022. A lot of people are pivoting to AI. Miners have been moving to AI. Probably a lot to unpack. Big question, but just, what are your overall thoughts on this lack of innovation, kind of identity crisis narrative that's starting to crop up?
Yeah, I'll say two things about it. It is real. You're seeing people leaving, so I won't belittle it. We did see the same thing in 2022. I think post FTX, you saw a number of people pivoting to AI. It was like almost a joke on X, if you remember. And in 2018, the extraction and the things that you just mentioned were worse in the ICO bubble than they were actually recently. I mean, it was gross in parts of the ICO bubble. So these feel familiar to me. And what I've seen over time is that some people stay throughout, right? Bitwise has been there for 8 years, but other competitors fade and new ones come in. So I don't think from a big picture perspective, this looks different than what we saw in 2022 and what we saw in 2018. To me, it felt just as raw. Some people felt just as betrayed. Some big names really did pivot. The difference here, and I'll point to Samani. I don't know. I mean, I know Kyle, but I don't know why he's left. I haven't caught up with him after his post. Is that AI is amazing. I do think that is true, right? And so I think it's natural to expect some portion of smart people and some portion of smart investors to turn their attention to AI. One of the reasons I think the market is down is that we've lost some of the attention economy in crypto. It used to be the coolest, hottest thing. And now AI is super cool and super hot. I don't know about you. I spend a reasonable amount of my time thinking about and using AI-based tools. And
Too much.
right? Yeah, too much, right? You can't not look. So that's just part of our world. And it is influencing the market. The bull case would say, and you're seeing posts on X about this yesterday. I think some Sequoia partner posted about this, that AI and crypto will eventually come together, and I believe that that is true, and that will be interesting and exciting. But just to be frank about what's going on in the market, there is another very exciting thing out there, and some portion of the market has directed its attention to that, and that has sucked some energy out of the room. That's just objectively true. I think it comes back long term. There's still amazing people in this space. There's a lot of interesting people coming into the space. But yeah, this is just a fact. I feel it in my own life, right? Spending time on AI in nights and weekends because it's interesting.
It can also be a huge lever. This is something I'm doing a lot of content on, a huge lever to make you a better investor. Like recently I started working on some agentic workflows to help me with reporting and research and reflecting on journaling my own trades. And it's a fantastic tool for institutions and individuals alike.
I think you have to be using it. You have to be using it, or you're not going to keep pace. Remember, when you're competing as an investor, you're competing against the world. And if other people are not doing that same thing on AI, then you're getting ahead of them. You're upskilling ahead of them. You're better, faster, leaner. And so you absolutely have to be doing it. It is an incredible tool. And I do think, for what it's worth, the AI-fi, to use a term that makes almost everyone feel uncomfortable, I think that term is going to come into the world and will be actually part of the catalyst for a rounding bottom in crypto.
I was going to ask you about this. Like, where do you see the crypto synergy with AI? Because I recently started seeing on Claude now called OpenClaw, like some agents getting together and transacting on crypto. Because obviously these agents can't open up like Stripe accounts or use MasterCard, so they're using blockchain. I'm interested to see whether this trend proliferates further. Is that something you've
I think it's going to be massive. I think it's very possible that the vast majority of users of crypto-based finance are going to be AI agents. Right? An AI agent is not going to go and open a bank account, but they can have a stablecoin wallet with the push of a button. And also, even all of the painful UX that's still very painful to use in DeFi is transparent and obvious to AI-based agents because it's all logic-based in code. So I think this is a huge catalyst. For what it's worth, a thing people don't talk about this, and one of the reasons I'm actually bullish on ETH and Solana, even independent of the store of value thesis that people try to append to that, is that the scale of transaction activity is going to be 100, 1,000 times bigger than it is in human life, because it's trivial for these AI agents to make transactions, and they work 24/7, 365, and they don't sleep. And something like a micro payment can make sense for them, and it doesn't make sense for me, because if I'm paying less than a penny for something, it's not worth my time, but it will be worth their time. So I think you're going to see an explosion in transaction activity. I think they could be the dominant users. And if you're bullish on agentic AI, I think it's hard not to be bullish on wallets, stablecoins, and DeFi.
Been really good.
All right. I've had a great time. Yeah. Thanks for the good questions from you and the audience. We're going to get there. Patience and a long-term view.
Amazing. Well, thank you guys very much. Thanks for tuning in. We'll see you later. Thank you.
All right. Thanks, everybody.